Hello and welcome. This is Derived Trader Academy. Today we are going to do a market analysis using price action. So I welcome you as we go through this class. And to start with, we have EURUSD. As we can see from your phone, we can see from your PC or from which platform you're using. This is MT5. If you're using TradingView, well and good, but MT5 is good to go just by the comfort of your phone. So we have EURUSD, and from what you can see as we begin our analysis, we shall use crosshair to explain what we are doing. So basically, when you're starting analyzing the market, before you even put a trade or before you make a judgment, there are two questions you should ask yourself. Is the market trending or is the market ranging? So we have a ranging market and a trending market. It's very important because when you are trading, you should know the direction of the market so that you can be able to know whether it's a buy or a long-term buy, or it's a short-term buy, or it is a sell, or the market is ranging. So from what you can see here, the moment you open your chart and you're using MT5, it should give you such a graph. This is EURUSD. We just using this currency pair because it is simpler to understand. So from the crosshair, you follow it closely so that you can understand. From here, if you are a beginner, the first thing to understand is that this market is trending and ranging. So the first thing to do is the market ranging or trending? So from here we can see the market has been trending all along. But from this point we can see the market from here. Let me just draw. From here the market has been ranging. Let me just draw it well so that you can be able to see it from which point it is ranging. So from this position we can see this market all along has been ranging. So before you make any analysis or before you draw your trend line or you use your indicators and all that, it's good to know, is the market trending or ranging? So basically I can guide you through. This is a trending market. You can see it is moving up in phases. This is, you can see this lower low, this is lower high, lower high, lower high. From this position we have high high, we have high high, we have high high. So this market is already trending from this position to this position. But on a ranging market or a consolidating market, we normally have only the supports and the resistances. So from here we can see we have a support here, we have another support, another support. We don't have high highs or higher lows. We have another support here. From here we can have a resistance, we have a resistance, a resistance, and a resistance. So this market, from what we can see, the current state of this EURUSD, it is ranging. So this is not a market that you say that it's trending, because it is already telling you that it is ranging. So from this point you can be able to know which analysis tools am I going to apply to make a judgment on my trade. For example, if you are supposed to say you want to sell or to buy, you should ask yourself, from this point, follow the crosshair clearly. From this point we can see the market touched the support. So in one judgment you can think the market shall go up to this point, but that is one judgment area we can consider of analyzing EURUSD. But again, there are other analysis you can incorporate to make sure that you make the right judgment. So the first thing, before you even think of trading, think of doing anything, you should ask yourself, is the market trending or the market is ranging? If you are a beginner, for example, if you follow this chart, you would think this market, because here it is already moving up, or because the trend line or the candlestick they are telling you it is selling, you can just sell or you can just buy. You can just sell impulsively or buy impulsively based on what you can see. But if you want to make profit out of this, you are trading against very wise traders, the money makers, the market makers. So before you make any trade, do not be attracted by the charts, by the part that you can see. It's good to know the actual direction, so that if it's on a buy, for example, it is in an uptrend, you can only look for a buy. You can only buy at this point, buy at this point, buy at this point. If it's on ranging market, you can only buy from the support or sell from the resistance, so that you cannot be selling from this point because you've seen a red candlestick. So I'll guide you on how to understand the reversal candlesticks, the continuations, and all that. But on this portion, when we see this ranging market, we either be able to draw using support and resistance or we can wait or find a chart analysis that we can be able to know what the direction of this market. Because one thing we need to know, this market, the forex market, it trends 30% and ranges 70%. So most of the time this market will not be trending, it will be ranging. So it's good and important to understand that this market will not trend forever. If it started here and moving up, it will never move up forever. So it will reach a time that it will start consolidating. So we take advantage of the the trend, and also take advantage of the consolidation. So let's go to, we are going to do a top-down analysis as we consider the price action. So let us go to the highest time frame, the monthly time frame, so that we can be able to start from there, and I will guide you step by step on how you can be able to draw and to make a judgment by just using your phone. So let's go to a weekly chart. We can consider a monthly chart. A monthly chart, I think it's the best because you're using a phone. If you're using maybe a laptop or so, you can be able to see the whole of this graph. But by the phone, you can be able to minimize. You expand using your hands to see the current movement of the market, but you can compress it so that you can be able to see the actual movement or the previous movement of the market. So from here, we can understand that this market, we can use the crosshair to explain. This market, you see, it is moving up, moving down, moving up, but from this point, it started moving down. So one thing we need to understand, this market, sorry for that, this market all along, it has been making higher highs. This is higher low, higher low, higher low. So we can use the higher highs and higher low to know the direction of the market, if it is trending or ranging, or whether it has changed its trend. Because I told you, the market does not trend forever. For example, it can be last year or maybe 5 years ago, the market can be, because this is a monthly time frame, the market maybe in the previous 10 years, it can be moving up. But maybe recently, the market could be moving down, as we can see through EURUSD. So the first thing to do before you even do any analysis, before you even place any indicator or any chart analysis, is to know the direction, the current direction of the market. So from here we can see we have higher low, sorry, we have higher low, we have higher low, and this higher low, if the market breaks its trend, maybe for example it was in an uptrend and it breaks this higher low, it tells you the market has changed its direction. For example, here we have higher high, follow the crosshair, we have higher high, higher high, higher high, higher high, higher high. But now from here we are seeing a higher low. So if this was our previous high, for example, this was our previous high, we see another higher low that is below the high that we had previously. It tells you the market has changed its trend. So initially it was in an uptrend, but now it is on a downtrend. So you cannot look for an opportunity to buy in this market because it's already in a downtrend. So that's the mistake most traders do, because they want to buy in a downtrend and they want to sell in an uptrend. Of course, it will injure your account because you can never go against the trend. The trend is always your friend. So from here we can look for opportunity to see how the market went. So basically, for us to understand where the market reversed, we can use our trend line. So our trend line, for you to know where to get your trend line, use this portion. From here you can see we have an icon. You can touch it, and from here I've been using trend line previously, but you can touch the plus sign here so that you can add trend line into your tools. Just touch it and you find we have several tools here that you can use. We have the vertical, the horizontal line, trend line. We have down here, we have other tools, equidistance and all that. So you can just touch trend line. You already have it, and we can just touch the screen or start the graph, and you can be able to draw easily. We are using trend line because trend lines are easy to draw. There are no complications. There are some who uses indicators, but I would recommend using a very simple way, because trading, if you, one of the traders says that if you cannot explain your trade to a newbie, to a nursery school kid, then you definitely, your trading is so complicated, because trading should be as easy as possible. So drawing our trend line, we are touching the high highs, the higher lows, the first higher low, another higher low, and from there we can be able to connect it with the price that the market broken the trend. So for us to know where the market or is moving, we can touch the trend line and copy another trend line so that you can be able to know the initial direction of this market. So you can compress your chart so that it can be visible. And basically, like I told you, the market moves in patterns. So from here, what you can see, let's use our cross here. The market was moving from this point. It moved here, moved up, moved down, moved up, moved down. But from this point, the market broken our trend line. So that is very important because it tells you this market is no longer now in an uptrend. Because if it was in an uptrend, it could have touched here and moved up to this point. But from what we can see, the market broken our trend line and came to this support. From I think you can see here we have a support. It touched this support and it started moving down. So that tells you what, that the market that we are now we are now the market that now we are looking into is already in a downtrend. So from there, now that we know that our market is no longer in an uptrend, it's now in a downtrend, we can focus now to draw the downtrend analysis, or rather the downtrend chart, to know where to place our sell or to know where to wait. So let's go and use another trend line. Yes, you just use trend line all through. They are easy to understand, easy to explain, easy to predict in where the direction of the market shall be. So from what you can see here, we can draw on trend line. Use the peak of the graph. So do not start drawing your trend line from this portion because it will mislead you. Start from the highest peak of the trend line. Yeah, that's how we normally draw it. And I would advise we also draw a downside candlestick or rather trend line so that we can be able to predict where the market will be going. So from what we can see, the market is following that channel. So follow closely. There are no complications here in explaining this analysis. The market was moving in this channel, the upward channel, this channel, this channel, this channel, which is here, which was broken, and now currently our market, we can even expand and we see it clearly. Now the market is following this channel in moving down. So we can see we have a higher high, a higher low, a higher low, a higher low, a higher low. So for you to know whether the market is going in the right direction, you need to understand this, the lower low. We have lower low here, lower low, we have lower low, we have lower low. And as long as this higher low has not broken the previous higher low, the market is still ripe for a sell. So do not go and say maybe this is a double bottom or this is an even head and shoulder and you start buying. The market should guide you through the major trend. That's why you're using a monthly time frame to analyze this market, to know the direction of the market. So from there, I've guided you on how to draw. Use the peak of the chart to draw down, touch the second higher low. From the down candlestick trend line, we can use this corner. These are the sectors that you need to know as you go by and buy, to know how to draw the downtrend, and so you can be able to project where you'll be setting your take profit. For example, if you are using a monthly time frame and maybe you are a swing trader and your capital is good, you can just come by using monthly, because you have seen the market has already broken the trend line and is now reversing, and from what we can see, it's already giving us an opportunity for a sell. For example, maybe if you are a swing trader, you could just put your trade there and put your take profit where somewhere there, and put your stop loss, and you put your stop loss. Let me just draw it again, and put your stop loss somewhere here, because you also need to be a risk taker. Put a stop loss somewhere there. So that is a good risk to reward. If you lose maybe that portion and you gain from all this portion, it tells you that you can make it to this market. So the best thing with trend line, they have a very clean edge. You can never lose. For example, out of 10, you can win 6 trades and lose 4, because in this market you must lose some and you must win, because it's a game of probability. So you don't come with the mentality of winning every time, because again, it's about probability. That's why we're using this chart analysis to try to predict the market. But trend line, they have been proven to work. They have a good edge. They have a good confidence. So from there, because I told you we are using a top-down analysis. From here, we will go to a weekly analysis. From here, we can see from our time frame, we can just rush to a weekly time frame and see how we shall draw. Yeah, this is our weekly now analysis that we had drawn. We had drawn through the monthly time frame, but now we can lower down and see the weekly. It's a top-down analysis. So we came from monthly, so we are in a weekly time frame, and from the weekly time frame, we can see the market is still responding to what we have analyzed in the monthly. Yeah, we can see. We can just zoom out and see. So that is the nature of the weekly analysis. So it is confirming through the monthly. So you don't make judgment using one time frame. That's a very mistake that many traders are making, especially the beginners. They normally just analyze using daily or hourly or minute 5 and they are good to go. But the moment you use a top-down analysis, it's able to confirm your analysis using different time frames. So if you've been there and you've been losing maybe because of using one time frame, I would urge you to use top-down analysis. You can choose 3 time frames. For example, you can use a monthly, hour 4, hour 1. You can use monthly, week 1, day 1. Yeah, they can help you to make the right judgment. So from there, we can confirm using week 1 the direction of our trend. So from there, let's rush to the daily time frame and see whether it is confirming our analysis. So this is our daily time frame, and as we can see, this market normally helps you to make the right judgment, especially when you are using top-down analysis. So from what we can see, the market has formed a head and shoulder. This is now where the chart patterns now comes in, because it's impossible to use chart patterns in monthly or weekly. But here we can see a clear head and shoulder. Here we have the head, here we have the left shoulder, we have the right shoulder. So we are putting all these together. We are using the top-down analysis using Trendline. Now we have gone to chart patterns to know whether this trade is the right trade, because here we normally put a trade as long as we have an edge, we have a good confirmation. So from what we can say from the daily time frame, we have the reversal pattern. So we normally have several reversal patterns. For example, we have head and shoulder, we have double top, double bottom. So all those, they are reversal patterns. So from what we can see here, because in the initial analysis from the weekly, we can see this portion was on our trend line and it was rejected. So from here we can see a head and shoulder. This is the head. Those of us maybe you don't know about the chart patterns. This is the head, this is the shoulder, this is the shoulder. So it tells you this market forming a head and shoulder, it's a reversal pattern, telling you this market will come all the way to this portion. Let's do another analysis using Trendline to know where, if this market, because it is becoming down, at which point will you be able to come out of this trade. We can use Trendline again using just your phone, and we can draw it clearly. We can touch the supports and the resistances. Yeah, that's what we normally, that's how we will draw it. Yeah, so we can see it's moving on well. Yeah, let's compress it a bit. So that's our analysis, the daily analysis. Our crosser again. So from here we can see the market was in an uptrend, but again it went back to touch the trend line. It's not, we cannot be able to draw it because we had already drawn this using a weekly time frame. So we lower down to more trend line to be able to make the right judgment. So from here we can see the market touched here, it touched here, another support, but here it broke the trend line. Very important. And from there, as it broke this price, it retested, because one thing, if you're we have two types of trader. We have an aggressive and conservative. If you're an aggressive trader, once the market breaks this trend line, you can sell immediately and maybe take your profit around this portion. And maybe sometimes your profit maybe may not, your take profit may not be hit, but it's good to be a conservative so that you can be able to wait for the market to be tested. So you can see here the trend line was broken, and so as a conservative trader we wait for a retest. So you see the market is tested here, and we can see from this portion we have a resistance. Most of the time when the trend line has been broken, the resistance turns to become the support, or the support turns to become the resistance. So the previous resistance, it turns to be our support. That is where the market reversed from. So if you were to sell, we were to analyze it even using a daily time frame, we could just draw this trend line and see where the market was broken, wait for a retest, and from here we can now look for a sell, because we are seeing the general market of the movement is a downtrend. So we look for an opportunity for it to sell. So it's good to know again, you don't need to analyze 20 pairs for you to make a good trade, or to make to be a successful trader. You can just maximize on only one trade. For example, when we know that this market is coming down, it's on a downtrend, we can look for several opportunities to make a sell. So for example, let's draw now, let's expand now this, so that we can be able to use a trend line, because now we already know this market is moving down. Let's try to draw a trend line to know where the market will be going, and to look for more opportunity to make a sell. Let's go to our trend line again. Sorry, let's go to our trend line. Yeah, from that point right there. We normally, no, another thing I told you, we normally start drawing trend line from the shoulder. Do not start from the head. Most of the people are making it a mess because they want to draw trend line from this portion. They want to draw it from here, and definitely you'll be making a mistake. So we normally draw from the shoulder. So connect that shoulder to that, so you can pull down your trend line. So we can see from our analysis, that is basically the movement of the market. We can see it clearly. We don't need to do a lot of indicator to tell us where the market is going, but just using trend, because this market is following patterns. So we can see here is a resistance, or a higher low, another higher low. So we have a lower low here. So this market tells you it will move further down. So let's use another trend line to try to know where this trade will reach to. So we can do it from that side. Yes, these are skills that maybe you will run later, of how to draw the down trend line to be able to project where the market will reach. So from what we can see, we can try to expand this a bit so that we can have a good projection. From what we can see, now analyzing this market, we have the head, we have the left shoulder, we have the right shoulder. Definitely tells you this market is coming down. So if maybe you were to use or to apply this trade as we are trading, by use of this chart as a confirmation of a reversal, because I told you head and shoulder is one of the reversal patterns. We have other double tops and all that. But if you were to sell this trade, for example, we get it here and we sell it somewhere here, this market definitely in the long run, it will come up to this point where the trend line started here. So you can confirm this trade. If you can put it in your watch list, you see this market eventually it will come down to this point, because it is a long-term downtrend. So if you are a swing trader, you can take advantage of this trade as long as it is on a sell. So it gave you an opportunity to sell from first, because of the reversal chart pattern. It tells you that it's on a sell. So from here you can sell. Again, you can sell here. Another opportunity to increase your sell. So from this one trade, you can put several trades, and from the moment this market is reaching here, you have your money back, or you have made a lot of profit, rather than selling here and coming out of it. If you're a day trader, well, you can sell here, do a short-term sell and come out of here. But if you are a swing trader, you can be able to maximize all this profit up to this point. So let's again zoom out and see the movement of the market. We have a lot of things that we can use to conference this trade. For example, we have the candlestick patterns, we have the continuation patterns. But from here we can see even the market has been rejected here by, we have a doji pin bar, confirmation of a movement of a red candlestick, confirming that our trade is on a sell. So if you are to use this trade, definitely this is a right trade to use. You can only sell in a downtrend, so do not buy. Do not look for an opportunity to buy this trade. You can only look for an opportunity to sell. So from there we can go to our 4 to confirm our analysis as a final time frame. So this is our 4 time frame, and as we can see, what we had drawn in the daily time frame, I think we can be able to draw it clearly, so that you can be able to touch the candlestick to the peak. It's very important to be excellent when you're drawing this trend, because one miss, it can misguide you, or you can make a buy where you are supposed to do a sell. So from what we can see here, we have a higher high, we have a higher low, higher low, higher low. And I told you, for you to identify or to know whether the market is still in a downtrend, as long as this trade has not broken this higher low, this market remains to be on a downtrend. As long as this, if maybe it was on a buy, as long as this market, you see from here we have a lower low, a lower low, a lower high, sorry, a lower high. So because this lower high was broken and now we have a lower low, a higher low, this market tells you it already changed the trajectory from the uptrend to the downtrend. So I told you, you can maximize on this trade as long as this market is selling. So from here, let's zoom out and see. We can see already this market has been confirmed with the candlestick chart patterns. So we can here we have the pin bar, a confirmation, another confirmation. So this trade, it tells you it will move all the way to this portion, all the way to this point. If you are a new buyer, maybe a short-term trader, you can sell this market here and come out of to this point. So you can be able to make let's see, for example, how many pips from that portion. You have around 200 pips just by using that strategy. You don't need to complicate it. You just need to do the right analysis. We are just using only trend line. You don't need any indicator. You don't need any addition of another tool for you to make it in trading these currency pairs. So basically, that's how you use top-down analysis. Price action purely. We don't have any indicator here. So do not overcomplicate your analysis. You can just use your phone to draw clean trend lines, and from there you can be able to make the right judgment. You don't need to, especially if you also put into place the reversal patterns and the continuation patterns that I'm going to show you later. You can be able to maximize on this trade. For example, let's go to our one time frame, so that you see we normally use analysis week 1, monthly, weekly, daily, and our 4 to confirm the direction of the market. And from there, we normally use our 1 minute, 30 minute, 15 to identify the continuation pattern and the reversal pattern, so that you can add to your box of confidence, to a confirmation that this trade is indeed going in the right direction. So let's maybe do a simple example of a continuation pattern and a reversal pattern using the hourly time frame. So go to our 1. For example, using our 1 time frame, because this trade we have said it is already on a downtrend. Maybe if you were to sell and maybe you opened your chart and you find this market to be somewhere here, from what we can see here, we have continuation patterns. For example, we have the flag, which is the rectangle, we have pennant, we have cup and handle. So from here we can see we have already a flag pattern. Let me just draw it clearly here. This is a flag just the way the flag is. So we can see this is a flag pattern. Let's use for example, we can use Trendline in drawing this flag pattern so that we can be able to understand it. So this is a flag. We can put it again here. Yes, we can draw it, try to draw it clearly. So from, if maybe this market you opened and you found already the market is gone, it doesn't mean that the market now you will not be able to trade because it's already left you. But you can maximize on the trade by identifying the continuation pattern. For example, this flag, it indicates a continuation. It's a continuation pattern. We have head and shoulder as a reversal, double top, double bottoms. Those are reversal patterns. But this is a continuation. So the market, I told you the market does not trend every time. It ranges 70% and it trends on 30%. So this market, for example, from here, you see the market was moving down all along. But from here, it started to range. So if you are a trader and maybe you opened your chart and you saw this market is already in a downtrend, you will wait for a continuation pattern to maximize on this trade. So from here, we can see a flag. Just the way the flag is drawn, we can see a flag. And if you see a flag, it tells you this market will still continue to sell. And as we can see, it broke our trend line, went. So do not be an aggressive trader. If you really want to make it in this trade, we went for a confirmation, a retest or a pullback of the same, and then the market from there it continued to sell. You see, if maybe you sold it from somewhere after retesting the trend line, this market continued to trend because it was ranging, it broke that range, it retested, and now it is coming down, and again it is forming another consolidation here. So basically you can maximize on this trade as much as it is on a sell. You don't need to close after maybe making a small profit, you can be able to identify if the market still going down or maybe continue with the trend. Another continuation pattern, we have the pennant. We can use Trendline again to draw. I'll be helping you to understand or to able to identify these continuation patterns. So we have a pennant here. A pennant is one of the continuation candlesticks, continuation pattern, sorry. So let's use another Trendline here that you can be able to identify this pennant. Yeah, that's how we draw it. So a pennant is basically in the shape of a pen, and it's a continuation pattern again. So from what we can see, this market was moving down, but it started moving right. It's in an uptrend. It's maybe trying to trap those impulsive buyers. Maybe, for example, you open this market and found this is maybe a double top, a double bottom, sorry, and you thought this market has already started moving. But if you are a good trader, you will identify this is a continuation pattern. You see this market started moving here, went up, went down, went up, went down, started moving up, but again it broke this portion, broken it, and it retested. Then it continued moving down. So these are the advantages that you have as you are analyzing. You don't need any indicator to be able to navigate through this trade or through this market. If you know these continuation reversal patterns and be able to draw trend lines clearly, then you can be able to make a fortune out of these trades. So basically, that is how we identify if a market is already in a continuation or is in a reversal. So from what we can see, this is a pennant. Yeah, pennant. You can just Google it or maybe try to study it. It's a very, very powerful continuation pattern. We also had the flag, another continuation pattern. So basically from that, we can be able to identify that this market is already moving down. So even from here, basically, we can be able to draw and see whether this market is continuing on, is on a reversal. So let's try to draw using a trend line. Yeah, yes, we touch that corner. Yeah, beautifully drawn. So basically, we can see, sorry for that, we can see this. So when you're drawing a flag can be facing up or it can facing in a horizontal way. So from what we can see, and of course a flag normally have equal distances, as we can see. So basically here we can see this is a flag pattern, and as I told you in the beginning, a flag is a continuation pattern. So do not wait for this market to reverse anytime soon. So what we can wait, if you are not in this trade, you can wait for this market to break here, and when it breaks, wait for a retest. For example, maybe it can break here, retest, and touch this support, and then continue moving down. So this is another continuation pattern telling you that this trade that we already analyzing EURUSD, it will continue selling even to further distances. So from here, let's go now to a daily time frame initially that we had, and as we can see, the market is still moving down, and eventually our trade will come up to this point. So you can see that it will come up to this point. So you can maximize on EURUSD as much as the market in a downtrend, and because it has not shown any signs of uptrend or reversal, this market remains to be very rich, so you can maximize on it. So basically that's what we draw. That's how we normally do price action. We don't overcomplicate our analysis. Just use trend line, use continuation and reversal patterns, and also we will normally have candlestick chart patterns as an added advantage. I'll be teaching that in our next class to identify or to confirm before, for example, you make a sell here. It's good to know the candlesticks that are confirming that this is indeed a sell. For example, here we had a doji hammer. It is confirming that indeed this trade, in addition to the trend line, in addition to the continuation pattern, in addition to the reversal pattern, also the candlestick patterns, they are confirming that this sell is valid. So with all those conferences, you will make so less mistake when you're trading this market. But if you maybe have only trend line alone, or maybe you have that indicator, chances are sure that maybe it will maybe make you one trade to be good, another trade, maybe 5 trades they are wrong. But you have a lot of conference. You trade like a casino. you have a lot of confidence to ensure that you make the right trade. So basically that's what we do in using our trading using Trendline price action without using any indicator, and by the comfort of your phone. So if you're just using a smartphone, you can be able to make a good trade out of this market and ensure that you make a long run impact and a long run profitability. So if you have a phone, you're good to go. You need just to open a Derived standard account. Also, I told you include these volatility indices. They are easy to draw. They normally follow technical analysis 100%. No news. They are very volatile and we don't have weekends. So they can, therefore, if you are good in this analysis, you can maximize on your profitability. So basically, that's what we do. If you have not subscribed, I would encourage you to subscribe to our channel so that every time we upload a video, you can be able to be notified. So I'll encourage you to subscribe, and you can share and like this video so that we can be able to work together. So basically, that's what we normally do. By using your phone, be able to make the right analysis, the right trade, and ensure that you make the right trades as you are doing this analysis. So basically that's what we'll do for today. We'll be dropping another analysis on candlestick patterns, and I know it will be helping you to make more analysis. So thank you. So subscribe and share and like this video, and see you in the next one.